Well, I think the buy side right now, when you talk to them, the common theme is they need liquidity. So one of the things they look for you to do is if you can't provide it, then you have to kind of get it, and you have to do it in an intelligent way. So they look for crossing opportunities. So that's why things like NX are incredibly important because that can be a unique forum for liquidity. They're looking for cost savings, the opportunity to trade between the spread. They're looking to make sure that you have best of breed technology, that you can access sources of liquidity outside of what you have in-house, hence the smart order routing functionality. They're looking to make sure that your risk controls are good, no fat fingers, are things starting to run away from you, how do you flag that, how do you quickly make sure that they're aware of it, how do you measure what kind of transaction costs that you're incurring, whether that's internally or externally. Transaction cost analysis is going to be a major initiative. It's already started. It'll become even more important over the next 12 months. Well, I mean, I think there's a general kind of question around risk in the sense that what happens when volatility spikes. There's concerns around double dip kind of recession. There's capital's gotten more expensive, balance sheet is more dear. There's definitely been a pullback in terms of capital commitment. You look at hedge funds that used to get financing on things like loans, some what I call illiquid assets. That's pretty much gone away, and that's also reflective of a lot of brokers' willingness to commit capital on trades. So a strong balance sheet is important. We continue to do risk facilitation. We think it is an important part of the business. That there will be, at the barbell ends, there will be an agency execution only type of a model and a risk transfer mechanism on the other. And we want to be well prepared to be able to handle both. Nomura's obviously built out a great franchise around the research product, #1 in Japan, #2 in Asia ex-Japan. So clearly people are willing to pay us for that intellectual content, but we don't want to limit ourselves just to those people, right? So for some there's index funds and quantitative managers that aren't natural consumers of that. They have their own models or they just need connectivity to the exchanges. We want to make sure that we can handle those guys, but we also need to make sure that we've got good trading tools, good risk models, so that when we want to do that block trade or when clients need to get out of a position, that we can understand the risk, that we can source liquidity properly. And it seems like some of our competitors have really scaled that back to the point where the buy side is really screaming for some alternative sources of liquidity, and that's why kind of that proliferation of crossing networks and dark pools is starting to really resonate with some of the client base.